So I want to capture that guy right there. So you see a level 2 just into that little swing there. You see it? So we got the level 2 right off that guy right there. And obviously the target price was to try and run, first of all, this guy here. And then secondly, run this guy here. And we got very close to running that guy before the price, unfortunately, got a little bit sticky at the bottom edge. And then we got that little easy trade off that trade. A perfect example of another perfect order flow, weak bottom edge buy trade. And it stacks up with yesterday's classroom, doesn't it? Think about the auction process here. Think about that auction process. Is that a bearish auction in the background? Yes or no? So when you look at this, this is almost a perfect sell, isn't it? This is almost a perfect sell with regard to the classroom we did yesterday. So we got the bearish auction in the background, and what do we have down here? We have a weak buyer to go after, haven't we? So we've got a bearish auction in the background. We've got a bottom edge weak buyer to go after. And as the price approaches the top edge, is that a poor auction? Is that there a poor auction or a strong auction? It's poor, isn't it? That's a very, very, very poor auction. So what are we going to do with that poor auction? We're going to sell into that poor auction, aren't we? Now, as it transpires, we got a poor auction back out of the area, didn't we? But you're not going to know it's a poor auction out of that area until you're in it. You understand? So I'm not going to know that that was a poor auction until I've got my short play in place. Now, you might say, well, why not wait for the success? Why not wait for a strong auction to kick back in on the downside? Because then, of course, I'm giving away an awful lot of my profit potential. But you might still want to do that. So in other words, you might have sold it when it traded here because you then saw that fast candle there and you thought to yourself, on that fast candle there, we're definitely going to go through the bottom edge. Well, it transpires you would have scratched that trade. You'd have ended up scratching there, wouldn't you? Now, the interesting thing from the buyer's point of view is that you're now getting a lot of trapped sellers at down into that 29 area, and therefore we're obviously going to try and take advantage of those guys and try and squeeze the price back up against these guys if the book can just turn a little bit more bullish than it is at the present moment. So we're obviously watching for that opportunity to try and get that little bit of an upside press on this. The book's just starting to turn bullish, but it's come back in again bearish. So I'm going to be very, very mindful. I'm going to run my stops into an immediate break-even trade. Just missed the screenshot, guys. I tried to get a screenshot there for a break-even, but obviously I just got touched on that one, and we've obviously had to go back in to go for that squeeze. And I'm just going to put my stops in at break-even again. So we got a lot of trapped sellers on the next one, and then we've taken advantage. There's a top line squeeze. We just told you. Boom! Another massive profit. 3.5 full points. Another $600 winner. But anyway, we were talking about this one here. So obviously when you see that weak auction into the lows, guess what you do? Bag and tag your monies. Weak auction into the lows, book goes bullish here, bag and tag your monies. Bag and tag it. Get ready for the next opportunity, which was the buy trade I've just been talking about there. And obviously the idea of not marrying a side on this seems to be the right trade at the moment, doesn't it? Because the price is going absolutely nowhere. It's going absolutely nowhere. But take a look at why it's going nowhere. Look. So the dealers had a choice. They either had to hedge this out if they were bearish, or they had to defend this level once you got above it. So the dealers have decided to try and defend this level for the time being. Now we can tell that simply because of what happened with the price action. They've decided to try and defend that. So obviously the idea is for the dealers is they've got to make a decision. What are they going to do in here? And they do that by looking at several aspects. They look at, for example, the rotations. We've talked about the rotations. They look at the rotations and they make their decision. This is VUG against VYM. So if you look at this, if you look at VYM, what is VYM? If you look at VYM, you'll see that VYM is the Vanguard high dividend yield. Yes? In other words, growth over yield today is really, really bullish. Really bullish. Growth over yield is incredibly bullish. What about growth over utilities? Growth over utilities has also got quite a strong rotation attached to it. So when we see this coming in, you're always going to be thinking to yourself, well, at the moment, the dealers have a better excuse to try and double down on this level, don't they? They've got a good excuse to double down on this level for the time being. But they're obviously on a weak-handed trade at the moment. They are under a lot of pressure to hold this price, because if they lose this price, then of course they could be in serious trouble. But with the value line still holding on to that, you're going to be very, very mindful of the fact that the volatility pricing just now is also not too bad into the low edges. Really, dealers have done a great job so far today. A great job so far today. So they've taken the price off the bottom edges. They've managed to rotate it. They've obviously lost a little bit of value as the price did rotate higher. So obviously they're very, very mindful of the fact that they may still have to aggressively hedge this break down to the straddle level. And that's still on the cards, because you can see there's a big rotation out of some of those rotations at the moment. See that? There's a big rotation out of that. So they're not going to try and defend this just yet. That could open the door to a little bit of slippiness back through to day low. So we're going to be watching for that slippiness coming in. And obviously we're just going to wait to see if the slippiness gets purchased or whether they just hedge out their exposure. Personally, I would be hedging out the exposure, and that seems to be what the dealer's doing right now, is they're all sell side only. There was a little sell opportunity off the 29s if you wanted it. There was a little trap buyer at 29s and they've got jammed and it's now trading 22s. But the book is still very bearish down to 20s. So do you see exactly how that played out? I told you that's how it would do it, guys. I told you I'm not buying it. Look at what's happened since I told you that. The price has sailed through the bottom edge. You see that? Sailed through the bottom edge. We called that before it sailed through the bottom edge, didn't we? We called it before it sailed through the bottom edge. So that's not a hindsight call. That was called live in the room for you if you wanted it. 29 sell side, now trading 16s. 16s. So now we're into day low. You're obviously going to watch to see what they do at day low. They've got decisions to make down here, guys. They've got big decisions to make down here. So at day low, they're trying to figure out whether they want to try and just hold on to this price or again go for more gamma scalp hedging. I've taken a little buy trade against some trapped sellers and I'm putting my stops in at break even. We've managed to get a quick profit out of it and I've got to stop at break even. Worst case scenario if it doesn't develop off the low price here. Crazy, isn't it? Crazy. How about that oil for crazy, guys? 78.50. Who liked the sell side at 78.50? Cliff. Where's all the oil traders? Did you love the 78.50 short? I didn't see anybody screaming it, but you should have been screaming it. 78.50 wholesale price. Level 2 auctions in front of you. Huge value. I've just got another bit of business done there on the S&P off the bottom edges, guys. Another winning trade. 100% winners today without even literally without a single tick drawdown today. That's how easy it can be if you just get active. If you just get active. Everybody see why I took a buy trade there? Because you can see there was a seller came in there against that slippiness. See how the slippiness is coming in there? So when the slippiness goes bullish and the book is still bullish and that seller's now exposed there, I'm going to try and get in against that seller, right? And I got in against the seller and I've just made myself another $1,000 on a 5 lot. Crazy, right? Crazy, crazy, crazy. So look at all those trades. One trade there, $1,000 profit. Another trade there, $600 profit. Another trade there, $300 profit. Another trade there when we took a screenshot, $600 and $500. They all started at 2:30. Every single one of them made 3 or 4 figures on a 5-lot trade. So again, you're not requiring to have a massive account to be able to trade these. You're just requiring to be fast on the trigger. The ability to execute is the biggest skill you can achieve. The biggest skill that most of you are missing out on just now is the ability to execute quickly. All this crap about confirmations. That's the problem, isn't it? We said many, many years ago, we said that the biggest challenge that retail traders have is this desire to have confirmation on everything they do. Well, we want confirmation, but we don't want the kind of confirmation that retail traders want, right? So when we look at that oil, how good was that trade? How much confirmation did you need for that? Not a lot. Why? Well, there was no level 2 at that stage, was there? The level 2 came in on that candle right there, didn't it? That was your level 2 candle right there. That was the start of the top line, agreed? That was the start of your top line. So what are you going to do when you see a level 2? You draw a box. You draw a box, don't you? The value is annihilated. You agree with that? The value is absolutely annihilated into a wholesale price, a change of behavior level, a toxic candle top line. That is a crazy opportunity to get short. And what happened? That's what happened. It's went from $78.50. It's just broken $78 on the downside. I don't see any reason why you should be buying it, except, of course, to take your money, taking some profits. You always take profits on a candle that looks like that. Always, always take some profits, because the price will nearly always bounce off of that type of candle, simply because of short covering rallies. And then try and join back in. Your job, if it's a short covering rally, is to join back in, agreed? Because if it's not a short covering rally, you should be trying to close your positions, not take profits. So you know as soon as you take a profit, your job is to add back in at a better price. That's the process that you get from execution. So you should be adding back in at 78. You should be trying to find a way to get back into that deal at that higher print and go after again the next bottom edge. And if you think it's bullish, you close out your positions, don't you? If you think it's bullish, you close out your positions and you start looking for the buy opportunity, don't you? If you don't think it's bullish, you take profits and you sell again. You take profits and you sell again. You take profits and you sell again. What a day, guys. What a day. We did exactly that process on bonds.